G'day everyone, it's Kyle Davey from PRD Real Estate. Thank you for joining me for the Q2 market wrap for 2023. What an interesting start to the year we have seen with properties continuing to sell, lower stock levels, interest rate rises, and a number of other factors that have impacted the sales market over the last 3 months. Today we'll be having a look through what we're seeing locally as well as information and data that's been provided through PRD Research, realestate.com.au and Domain, and having a look at wider market trends and events that are worth knowing about. Let's go have a look. So to kick things off, let's start with the raw data. Now, these have been pulled from Pricefinder, and we might see a couple more sales trickle through yet, but for the most part, this is going to be quite accurate on what we've seen for that Q2 figures. Now, what I've put together here are the figures for quarter two, quarter one of 2023, as well as quarter two 2022. So comparing both last quarter and last year to the most recent 3 months. A couple of interesting things have popped out. So what I've prepared is broken up the data into three categories, and they are houses, units, land, and then a collective at the bottom. But also, instead of just doing the average price and the number of sales, I've also included the median. Now, the reason I use both median and average is to try and gauge not only what's happening, but try and identify where in the market we're seeing these trends or these shifts. So interestingly, what we saw, the difference between Q1 20 this year and Q2 this year was that the number of house sales actually stayed quite constant. There was a fall in the number of unit sales, and land sales again fairly similar. We did see the average price for houses, units, and land all fall over the last 3 months. But again, particularly with houses, we did see that the median price, although it did decrease slightly, it wasn't by a significant amount. This suggests that the area of the market that could be softening is the top end, and we're still seeing good interest in the middle and lower end of houses, and the same applies to units. Now, what we're seeing out in the trenches really does confirm that with solid numbers on your usual or your common 4-bed, 2-bathroom homes and properties like that, and those higher end properties with a little bit longer days on market and maybe softening a little bit in the price area. Compared to this time last year, as you'd expect, there's a pretty significant decrease in the number of sales for land, for units, and for houses. Interestingly, the number of sales across all three fell from nearly 250 down to nearly 150. So that's around about 40% fewer sales during the quarter this year compared to last year, same time. Now, we are seeing that as well. The number of new listings that's appearing online, and for those people who are buying property, will be noticing this as well. Fewer properties going on realestate.com, and those that are going up there aren't lasting particularly long. A couple of interesting things that I did see in the data that I think are worth mentioning is that we have seen a fall in the the average price of units. That median figure did go up quite considerably and then fall down a little bit in the most recent quarter. A little bit of that, I think, will be just the nature of what units have sold or what units have transacted. It's an interesting time as well with the unit space because there is still good demand, but what we have seen is that a lot of the units that have wanted to transact over the last 2 years have transacted, and we're back now more towards a more neutral, more natural landscape when it comes to properties coming onto the market, more of a normal attrition rate. Same again applies to houses as well. I think that's where we're going to see a little bit more consistency. The numbers from Q1 versus Q2 in that house space are fairly constant. Again, I think that higher end has softened a little bit, and we are seeing houses anything sub 700 getting snapped up quite quickly. Now, as we move forward, now you will see again with that data, a lot of these things we would have seen last time I did a market update for Q1. A lot of that information is still quite true and has held quite constant. So that is that we have seen the number of sales fall compared to last quarter a little bit, but again, year on year has fallen by 40%, which was a figure that I threw out in my last video. We also saw the days on market still be quite consistent. So properties are still transacting. We're still seeing a number of properties go to multiple offers, and prices have remained fairly firm. And I put that down to a couple of things: lack of stock and the cost of building. Those two things again have kept prices quite firm. There is still that short supply in property, so we are seeing when a property does come to market, generally, if it is marketed correctly, it is selling quite quickly, and we are having good interest in the first 14 days. Uh, Australia-wide and particularly locally, the rental market still continues to be very tight. I know within our office, our property management team last week boasted a 0% vacancy rate, meaning not one vacant property in our portfolio. For anyone out there who is interested in having their property management reviewed, please do contact our property management team. Lorna Serpentine and her team there are absolutely fantastic at what they do, multiple award winners over the last few years. We've also seen an interesting figure come out of our Accommodation Whitsunday team. The number of bookings that we've seen over the last quarter increased significantly. And I know this week, one of the figures that was thrown out by our team was quite a significant number of increased bookings compared to last week and for the last several weeks. So what I think that might be is people returning home from their holidays, having loved it here and booking their next holiday. So really excited to see what our arrivals look like coming into the September school holidays. And I predict, and pretty easy prediction too, that we'll see another bumper year or bumper end of year for Airlie Beach. We're going to see some pretty strong numbers basically from the Airlie Beach Music Festival the whole way through. Okay, so crystal ball time. What do I think is going to happen in Q3 and beyond? So what's in store for the rest of 2023? Personally, I think we're going to continue to see a pretty tight market for the next couple of months. I do think a few more properties will start to come to market over Q3 and into Q4. Again, a little bit of seasonality with that, combined with the fact that I also feel that there is a little bit of a shift in the market coming. I believe we won't see a significant increase or decrease in prices. Our market is fairly, in my opinion, safe from those volatilities that we're seeing in the regional markets in the southern states. Continue to see a similar number of buyers as to what we're seeing now. I think we're past that significant migration of people to our region and back to a more natural level of locals looking for homes and the natural level of people having moved to the area seeking properties. There could be some more softening at that high end of property prices. I think that relates back to what we've seen in southern markets, some lost equity and these interest rate rises that we are seeing, making those higher repayments less affordable than what we were seeing 12 months ago, 24 months ago, when interest rates were significantly lower than what we are seeing now. Medium and bottom end properties, I think, will continue to shine and really perform quite well. Now, the RBA, what do I think they're going to do? So for me, I believe there is another one, potentially two RBA rate movements upwards this year. And the reason I believe that could be the case is we've seen some positive news out of the US in terms of their inflation rates, but we're still seeing a lot of spending, particularly by the retirement age in Australia. That group are still spending, and we've seen that although the RBA have been able to curb spending and lower inflation among Australians under 65, those with less of a mortgage or who haven't been as affected by those rate increases are continuing to spend. Now, for those of you who saw our Q1 video, you wouldn't have seen this section last time. I've introduced that for Q2. It's called In the Know, and really what this is all about is just a few facts and figures or bits and pieces that I've collected over the last 3 months that I found quite interesting and I thought I'd share with you. Now, the first one of those is that we are holding our PRD Research Night on Wednesday, the 9th of August at the Reef Gateway Hotel. We have a number of special guests who will be presenting. The lead will be Dr. Asti Maradissimo, who is part of our PRD research team. Now, Dr. Asti is a Doctor of Economics, and she has held several positions, including a liaison with the RBA board. Now, she fantastic source of knowledge. And for anyone who would like to come along, please do get in contact and I can arrange an RSVP for you to attend. Next, we saw 174 flights into the Proserpine Airport in May 2023. Now, obviously, Bonza has launched now. They have made some adjustments to their flight schedules, but those numbers at 174 flights in the month of May is just astounding. It's nearly 6 flights per day, which really speaks volumes to what we're seeing locally in terms of the number of people flying to the region. The Elementa project is underway with Cumberland Homes up on Hermitage Drive. Very excited to see that one when it's complete. I've driven past a couple of times and I know the boys from Cumberland Homes will be doing a wonderful job up there. There was a change in RBA governor at the start of Q3, so I snuck this in here, even though it is more of a Q3 figure. But we saw Philip Lowe step aside and a new RBA governor introduced. Now, will this impact what we're seeing in terms of interest rate rises? I think it can. My gut says initially that we will see some relief from the RBA, if nothing else, to try and win the Australian people over. However, at the end of the day, there's still a job to do in terms of tackling inflation. And if they believe that the best way to do that is through interest rate rises, we may see that continue to occur. US inflation levels were recorded at 3% for the month of June. However, this is the lowest since late 2020. So that is an incredible stat because generally what happens in the US will lead into what we're seeing here in Australia, at least to some degree. So for them to be back in their target zone in terms of inflation, it's fantastic news for us. Now, it may not translate to interest or mortgage relief instantly. However, hopefully it will mean that we'll start to see a little bit more relief sooner rather than later. The Bicentennial Walkway upgrade stage 2 has been budgeted for the coming year, which is exciting. I know a lot of people who are a big fan of the work that has been done with the stage 1 upgrade so far. And this one I only found out recently, but there has been a $6.5 million project proposed in the hinterland off Mackay. This is a renewable energies project, which would be absolutely fantastic for the region. We really are leading Queensland and I would argue Australia with some of the projects we've seen, from the Agave farm to Tassals through to the solar farm in Bowen. The Whitsunday region really has done well in capturing these large scale projects. And lastly, but not least, for anyone out there like me who loves their fishing, please remember that the new Spanish mackerel closures and limits came into effect as of the 1st of July. So as it stands now, we're seeing a RBA cash rate of 4.1%. Westpac has estimated that that will peak at 4.6%, and they're predicting that was in September. This is the most recent version of this chart pulled from the Westpac website, and they're expecting the first rate decrease could be middle 2024, so in around about 12 months' time. Over the last 3 months, we saw April keep a flat rate, so no movement in April, and then 0.25% increases in both May and June. Again, using ratecity.com.au, they have put forward each of the big four's prediction in terms of where they see rates climbing to. All I should say, Westpac, NAB, and ANZ all predict peaks at 4.6%. That would be another 2 rate movements. Commonwealth Bank, a little bit more optimistic for those of us who have mortgages, predicting a peak of 4.35. That would be one more 25 basis point increase out of the RBA. I did have a quick look online, again, subject to change as per always, but what I have seen out there is a couple of rates. The 2-year fixed rate from Westpac at 5.99%, Commonwealth Bank 3-year fixed rate at 6.34%, and Unloan, the Commonwealth Bank no frills online only facility, they have a variable rate, again, depending on situation, from 5.59%. So there are still some reasonable deals out there in terms of interest rates being offered. A lot of the predictions do suggest that we're going to continue to see things fairly flat between now and the middle of next year. So again, what I always say as someone who is an ex-mortgage lender is that fixed rates aren't meant to outsmart the market. Fixed rates are supposed to give you certainty in knowing what your repayments are going to be now, next month, and until the end of your fixed rate. So that is the benefit of a genuine fixed rate. Well, that's it. That's a wrap on Q2 2023. For those of you who've made it this far, thank you very much for watching. If you do have any questions or would like to discuss the market, always happy to do so. Please feel free. Contact details are just over here, and I'll see you in 3 months' time.